Good afternoon and welcome to today's live show. Make sure if you are not watching this live, there's going to be no YouTube video tonight. This is the YouTube video. At the end of this video, in the last 15 minutes, we are going to do a breakdown of all the stocks that we cover on this channel at the close. Okay, so if you're looking for that technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, we're going to look at Microsoft really closely and Google, seeing some signs that we could get a bounce in those two. So we're paying attention to that. Tune into the last 15 minutes so you can get that breakdown. That'll pretty much be tonight's video. And make sure that if you're trying to learn about this stuff, that course is only on sale, $149 for the next 4 days. Okay, 4 days left to get that. By May 4th, that price will increase. So I highly encourage you to grab that as it is on a discount right now. But going forward, I just wanted to talk about this Microsoft thing. We did post this to Patreon, right? So there's a benefit to being part of the Patreon. You can see some of the stuff that we're going to pay attention to before that YouTube video even comes out. All right. A little sip of Dr. Pepper this afternoon. And now, what do we see from here, and why are we paying attention to this? Well, we have a divergence here. We have multiple point divergence on the MACD, right? We're going to talk a lot about this towards the end with the breakdown, see what comes of this. As of right now, reacting right towards that weekly expected move for Microsoft. We have to pay attention to signals like this. We do have multiple point divergence here, and we do have a triple divergence down here on the RSI. And good afternoon, Matthew. First chatter in. Matthew, welcome. I got to learn how to say your name. I feel like it's like Stankiewicz. It sounds like Stankiewicz to me. Anyway, what can we pay attention to with this? I'm getting a lot of questions on Patreon, at least in today, saying, you know, can this be a sign the market's going to turn around? Well, I want to refer you back to a time where things were really looking ugly. It looked like we could turn to the downside, and we started to pop higher. I just want you to pay attention to things like that. We have Apple and Tesla, right? Apple showing us a lot of daily divergence down here, looking like it needs a big move. Tesla already starting its big move, able to drip back down, but we're seeing if that can turn back up. We're going to go through these individually right now. Hopefully we can do it in 7 minutes. Let's try to do it in 7 minutes. So what you need to read into is say, I'm going to treat Microsoft as an individual thing at this moment, but if it starts to go across the board and other things start to turn up as well, well, what can happen? This 2 hour can cross into positive territory, and this is going to be some kind of pullback. Right now, we have to be open to this turning back around. If we see positivity, we can still pay attention to this 30-minute rolling up into positive territory and see if that fades at any point, rolls back down. Whenever this rolls back down, hey, we're going to continue this negative trend. Remember, we could be in a different trend right now because we broke out of structure. So unless we are going to see something that gets us back into this structure very dramatically or something like that, we could just see this drift up and curl right back down, and this is some kind of retest, and this maybe is some kind of left head, and we go create a right shoulder. So I'm still paying attention to downside, but it really does look like Microsoft is telling us to be aware for upside even across the board. If everything starts to work together, if we get some good news here, we can see that pop, and then make sure to be careful as earnings are right around the corner. Even though I'm talking about upside, and yes, I am taking that Microsoft play as of right now, I still have my hedge for any downside in place in this area, because this could just be some kind of bounce, and then I have to get out of that position. So Qs, very similar thing. See the 30-minute curl up. The cool part about the Qs, where are they hitting? Weekly ranges, you know, and this happens with individual stocks, guys. I can't encourage you enough to be a part of the Patreon. I told Patreon about, you guys want to know when I told Patreon about the Microsoft play? It was right here at this bar. Okay, it's pretty much like right here at this bar. So this tells me, okay, this can go up from here. Actually, I think it was even lower than that. I literally think it was like really in this area right in here. Actually, yes, it was in this area, and then we see that buying back up. We're fighting that weekly expected move, but it gets you in a little earlier. Time can eat away at you, but you want that position start scaling in. But as of right now, you really want confirmation on these, right? I have no confirmations just yet. I'm just putting in my first buy at this point because I did cross up on this 30-minute, and I'm seeing if that can go positive. But if that wants to drift back down and give me something, well, then my position will get a little bit bigger. Okay, it will get a little bit bigger there, but I do have that hedge in place for Microsoft. Very, very good thing to pay attention to going forward. It's seriously, it is like crazy how good this actually looks when you do have those weekly ranges up. You would notice it. So I highly encourage you to join the Patreon. Now, it's not saying that this has to play out, right? This could be some kind of pop. This could not even happen. Okay, this could not even happen, but the probabilities are that we bounce from this level. I just want to point that out. Apple seeing some upside here. Remember, we need a closing bar right above, I think I said 171.37, right? Pretty much this high up here. Now, 171 would probably be where you want that close, but notice we're really struggling right at that level. So this wick here coming into play, we're not able to close above it just yet. We'll have to see what's going on, but remember that Apple has divergence down here. If this goes positive in any way, especially after earnings, if those are good, you're going to see a big move. What's the last time we saw a look kind of like this? A little, not the best structure, a lot better structure over here, but what happened last time? Boom, we rocketed up. So I just want you to be aware a big move can come from Apple. Earnings, it's a 50-50 flip. But as of right now, Microsoft also saying, hey, I'm ready for an upward move. So just pay attention to if these things start to curl up. Tesla, we kind of already went over this, but 30-minute, really want to pay attention to this. Look at that, 30-minute, going to use the top side of the weekly expected move. Like we talk about when you get crazy outside of this, this is a positive move. We can curl down to that center line, use the weekly as support. And it's right around that 180.95. It's a little bit lower than that, but we can use that as support to then head higher. Around this area is where I'll be paying attention. If we get there very quickly, this could just be some kind of pop that then drops. But if this wants to go higher, move down like this, maybe just scale out again, like consolidate again. What could we see way across the way here? Big left shoulder. This is your head in this zone. If we react up to there, we could get a big right shoulder and start to move to higher levels for Tesla. I just want you to be aware that the upside could be coming today. Amazon, this hasn't even curled up on the 30-minute yet. It was struggling, it faded, but now you have the structure. You have the right shoulder, you have the left shoulder, and you have the head down there. Now we just need to confirm above these levels. We confirm that. Look at the 30-minute rolling up, positive territory. I'm just telling you right away, some upside could be coming. Not saying it has to. We're going to have some volatility for the next hour. I just want you to be aware of the things that are developing. Remember, we were talking about NVIDIA heading towards this zone. What's it doing? It's heading towards this zone. You can see it's fighting to stay in it. Now we need that 30-minute to roll up and go positive. You probably want to search and look for an hourly here. It's really close to the center line. If that can produce here, 30-minute can produce, go to the positive territory. Hey, test this high, maybe even go make a new one. So NVIDIA also could have a big move. It is outside of its weekly range to the downside. I just want you to be aware of that. Now, something with NVIDIA you have to be aware of. This 2-hour did cross over pretty recently, and you're below the weekly expected move. You're right by negative territory. So if this is going to escalate, now's the time. So you're pretty much in a time where it's like we bounce or this selling escalates, and that's why I'm just scaling into the position with a smaller buy for Microsoft. Now, this here would be huge if we can turn this back around. Well, AMD might even see a good buy up here. If that 2-hour divergence confirms, watch out, the daily might curl up, right? The daily might reject this crossing, turn back up, and then come up to a point of like 183.20. Now, you got a lot of things to get through. You got to get through this level of 164, 163. You got to get through a lot. And then after that, you can head up towards 183.20. But I think maybe something like this could be coming over the next few weeks. And we'll see. Now, this pop could just be a sudden pop and drop, but I'm expecting the SPY and the Qs to go a little bit higher. Now, if we're going to still set up those 2-hour divergences, that's perfectly fine with me, right? I'm trading like water. Now, Meta not able to see a big downward move yet. Very, very interesting. Able to buy back up towards positive territory. So now we're right at that center line. We've moved sideways for quite some time. What would we expect here? Well, you get above 453.08. That's a good sign. Weekly range is down in this area down here. So if this wants to curl over, well, look for a brief divergence there for Meta. Microsoft, this is the big dog we're paying attention to, able to cross, have my first buy, just a small position. If that rolls down, I see volatility, and then I see that curl up again, I can take another position at this point right here. But Microsoft looks like it is telling us some good things going to happen. Okay, data was just released. Let's see what that data has in store for us today, and we're going to pull that up right now. All right, we're pulling that up right now. Let's go look at that data. Boom, we got data here. Okay, not non-farm payrolls. We want the Fed interest rate decision not popping up just yet. We'll have to see. Maybe I could reload this, see if it pops up. And of course, now it's going to pop up all the other countries. So I got to change this around a little. Hit save. Now we're back on it. Okay, Fed interest rate, keeping it at 5.5. So we'll have to see if that's affected. So we're not seeing any kind of big pumps or anything like that just yet. We'll have to see how that's affected by the market at this point. And most of the time when you get the Fed interest rate decision, it is interesting because we kind of mess around, and we still mess around for another 30 minutes until Jerome Powell talks. So we will be watching Jerome Powell. We're clearly water here, okay? All right, what do you guys think is going to happen today? Are we going to, let's get a dovish or hawkish in the chat. Do we, or actually, let's do this. This will be better because it depends on how the market reads it. Do we end the day positive or negative, as the SPY is at negative 0.10? Let's pay attention to that. Let's look at the SPY real quick. Are we going to end up curling up the 30-minute and going positive, ending on a green day, or are we going to see that negativity set in? Bullish, bearish, green, red, up, down. Let me know what you think. Powell with a surprise. He's going to go, hey, surprise. Now, something you can pay attention to actually while he's talking. We can watch a 5-minute. One thing I was looking at, let me look at my other charts. I think I did it on my other charts here. It was a 5-minute chart on, actually, it might have been this one here. I just wanted to show how the Dow actually coming down like this was showing a trend here. Now we're getting a new trend. We'll have to see if this is just some kind of cup and handle to actually end up going lower in this position as you are going up, creating some small divergence there, but seeing if that can turn up. If we can turn up on this 30-minute, right, we're able to do it as of now. So now we want to look at a 2-hour most likely, but good sign for some positivity, but isn't it looking pretty flaggy? You see the little wicks coming in even on the 30-minute. We could just see another drop off from this area. So we're paying attention, but I think we're going to mess around until we're going to do a classic mess around until Mr. Jerome Powell comes out and talks. How's everyone's day going as of right now? Does anyone have some good plays they were looking into? Anyone have something they want to buy today? What are you guys looking at? And Richard, welcome. Miles, welcome. Happy Friday. Mojoma. Quandale, Dingleberry's back. Ryan, Mr. Young Gun. Bernie, welcome, welcome, Bernie. I hope you were able to take some of that course. Junior Iglesias. At least I did I read that right? Yeah, I think I did. What up, Junior? Brian, welcome to the channel. I like anime. Richard, King of Light. I like that. And we'll see. Question, I bought Mara, and I think it's crazy that it is not moving with Bitcoin at all. They are a little bit separated. It might lag behind a little bit. You bought Mara, and you're wondering why it's not happening with the Bitcoin bounce. Really from here, you just want to pay attention, but Mara might lag behind with the data. You kind of have the day trader investor types in that. It might lag behind and wait for that data, but Bitcoin breaking through structure here, not a good sign. Really has to buy up at this point because it's looking pretty bearish. You kind of did not confirm any of these divergences, right? So any energy that could have been pushed from these little divergences in here to the upside was distributed to the downside, and that's what you have to be worried about with the stock market. You have to be worried about this type of thing happening where things like Microsoft, things like Apple, things like Tesla, they have these big divergences even on the daily, and then will that actually go positive? Because if that rolls negative, you see the distribution of that energy when we do get tight. Up 171% on my call option. Let's go. It's still Thursday in Amsterdam. Damn. Amsterdam. Mara's up, though, and I haven't looked at Mara too much. Mara's up 3%. It did dip down here. You're looking for that 2-hour to curl back up, maybe even 30-minute. Let's look at this 30-minute. 30-minute going negative here, so just be a little cautious. But as of right now, you could say, hey, an hourly chart or a 2-hour chart, looking for that to curl up and go positive. That would be your real sign that we're going to head higher, and this is going to get a second leg here. So where would this end us going? Okay, well, can I grab stuff correctly today? My goodness, come on. Well, I'd say, hey, we have a chance to go up towards this level up here. And the cool part about Mara, when you do look at it from this angle, right, looking at it from the hourly, you can tell where we would want to build structure, right? It would be probably somewhere at this level right here of 23.75, and then we'd see some kind of big move up. We get a big distribution there, and then bam, this is some kind of trap, and we actually get a left head and a right shoulder. So paying attention to that with Mara, but we have to pay attention to first if we're able to get into positive territory. Thing is, 50,000 Bitcoin mining becomes negative. It will cost mine and then crash. Mega pump incoming. It could, But just know we have earnings right around the corner. If Apple starts to get overzealous or something like that, we're going to be a little bit worried about this move. Doesn't mean we can't play the upside on the way up. As of right now, it seems like people don't want to do much with that data. They really want to wait for Jerome Powell. Yeah, Matthew, I hope that was helpful. I know it's kind of an interesting thing. I would just really look for that confirmation of upside on the hourly, and I think you'll be in an okay spot to test that high. You just want to, find that way that you can get screwed out of the trade, right? Seeing that 30-minute, you see how it's going green, but it's getting close to that center line. If that curls down, you might want to rethink that position. That's just how I do things. I like to stay aware of what signal would be good to pay attention to if I'm going to see another drop, and that would ruin my calls, right? So I just pay attention to what is actually going to screw me out of the trade. But thank you guys so much for joining. The Sad Man says, is there a mega pump coming? I mean, you're pretty much going like this. Apple has daily divergences. Tesla has a triple divergence and already pumped. Amazon had good earnings, wants to go higher. Nvidia, not really getting bad news, just kind of going down with the market as of right now. And now we can see if that wants to build back up. Now, AMD did give the earnings here, and that was kind of the damper on this one probably, but we're going exactly where we said would be the potential for us to rotate back up. So maybe we do not get that point of divergence, which tells you something, because in this area, doesn't this look eerily a little similar to Nvidia at this point? Two big moves up. Okay, one big drop here, another drop here. Well, let's look at Nvidia, see how that happened. Well, one big move up, big drop, one big move up, big drop. Okay, so I need to pay attention because Nvidia is a big player in this, and boom, we can see that start to rise back up. Fed says inflation is in control with, of course, data, and we'll see. We'll frickin' see, but that's all right. Overall, the Fed is, I think someone said it right this morning, the Fed is here to, convince us that bad news is good news and good news is good news, and we're still in that environment. That's why if you have been subscribed to this channel for a while, you just know, what are we saying all the time? Oh, something's most likely going to have to break to bring this thing down. People are getting way too bullish and way too, trained to just be bullish on whatever is said all the time, and that's a very bad recipe. What kind of trade you do? I like to do a position style 2 to 4 weeks out, and usually I sell within 1 to 2 weeks. But lately with these big moves, that's the good part about volatility being up and using strategies that I have and the strategy that I give in the course is usually if you see the signal, like if I see this Microsoft signal, I know that this market's going to rip me around and give me plenty of trades. So if this I guess we're on a 1 hour, but if this 2 hour can curl up, I know that, hey, it's got a good shot to go all the way up to 413. What would that do? Okay, if we go even up to this level right here, if we just go up to like 405, I make double my money. I double my money that fast. And then if we go any higher on that, well, hey, I can go even better. But a lot of the time I just take money out as volatility is higher, and you could just see a pop up and a pop right back down by Friday. So overall, I buy positions that are 2 to 4 weeks out in an environment like this. And then I usually end up selling in an environment like this within like the first 3 days, unless I have to scale in. It helps me a lot. It helps me a lot because I can scale into stuff. Well, I did after World Wars. Yes, we're okay, but not ideal. And that's one thing that you have to pay attention to as well. The TLT actually dropping off, these rates going ballistic, and we're still going higher. Now, this is technically a lower high at this point. Maybe this wants to drift down, but it's really going to depend on what Jerome Powell says. And weirdly enough, if you really pay attention to what's been going on, it's actually been the rates go higher, the stock market goes higher as of right now, right? So you're noticing that the rates came down today. What do we see? A down day. Now, yesterday, those did pump up. So we'll have to pay attention to that with that last pump up there, but we'll see what's going on with this. Usually it is when the rates actually drop that. I think it's 6 to 18 months later, you actually see the market crash down in some kind of recession. So paying attention to volatility, we got that test of 15. We got a tiny pop. Now, I thought we would see a little bit bigger pop here, and so we could get that second leg higher. So don't think because I have calls on Microsoft, I'm still ignoring all the downside potential. I'm just saying Microsoft looks like a good position to go higher from there. But if this volatility wants to scale up like this, what can I pay attention to? Maybe a 30-minute divergence up here towards that 1683. Remember, 1683 is usually when that good selling comes in. So if we get above 1683, it's going to be very worrisome for the stock market. The dollar during all this dropping off, right? It's dropping off. So the stock market going down a little bit while the dollar going down could mean that there is some buyers in this area. We'll have to see if this wants to make a turn to the upside, but you can see this on the daily. Most likely, if this crosses up on the daily, we're going to see some kind of selling come in because that correlation between the stock market, right? Dollar up, stock market down. We got 20 minutes until Jerome Powell, who's excited. Yeah, of course they're waiting on data. They've been waiting on data for 3 years, man. They've been waiting on data for 3 years, and then they react. They react when it is in their benefit. They react when it is in the benefit of their rich people who are their friends. They react when it is in the benefit of the politicians. They only react in those. We saw a spike up in volatility. What happens? Their reaction is to remain higher for longer and let the bond market do their job for them. Connie's excited. Apparently I look good in pink. I don't really follow Indian markets too much, no. Market used to follow US market, but for a while now, seeing we're both are inverse. We hit new all-time high on Friday, so pump for US now. It very well could be. We'll have to see. Next meeting, Fed will be forced to decide. And Richard, I think I agree with you. I think we might be in the scenario of a sell in May and goodbye. I'm going away, right? Well, I'm not going away. Once it's sell in May and go away, that's when I start to make good money, right? I see the pumps up, I get the volatility a little higher, and then I get to trade this thing on the way down if it does happen. Now, to be aware of the daily scale here, if this sees any green for the next 2 days, we could get that breakout. And guess what? You are nowhere near the upside weekly expected move. So if we see green for the next 2 days, Thursday and Friday, we actually could be getting across this MACD. Now, what would happen from here? Well, we might see some kind of big move up to this area. Uh-oh, what about divergences that could form? That's what I'd be paying attention to if we see some kind of mega pump, like we were talking about. Someone mentioned a mega pump. Johnny, I see you. Let me see here. I'm just watching Meta. Technicals are looking so-so, but those fundamentals are top-notch. Only way to advertise these days. I'm going to say this about Meta. I think Meta was beat up for pretty much no reason here. And if this curls up, we're probably getting above 453.08. So we'll have to see what happens with today. But you see the 2 hour well into negative territory. So we got some work to do here. But I would think that this was probably an overreaction in some way. The weekly moves right here. Now maybe we head up by the end of the week and we can see that continued buying. So we'll have to see from here. Microsoft also just still playing around at its weekly expected move. Up up about 1% until by the time we actually told you guys about this on Patreon. So this double bottom here could prove to be something. So we have to pay attention. Now, quick note, remember, it's not in the nearest price action. You just have multiple point divergence around here. So could be something to look into, but really close to positive territory. I like the look of it. Next meeting, Fed will be forced to decide. I think they'll be forced to decide. Most likely, the decision will be made for them because we're going to go through some kind of distress. I really think, remember, guys, we were leaning towards this as we saw those yields climbing higher and higher. Banks are getting under more and more and more pressure. And they even said themselves, quote, Jerome Powell, quote, some banks will fail, close the fucking door. That's what he said. That's like verbatim. All right, we got about 15 minutes until we're going to watch Mr. Jerome Powell. Coin setting up a good look, and I expect that, right? Bitcoin buying up a little bit, right? So we would think coin follows that price action. It mostly just follows it here. Hey, look at this. You are right to call this out. Juju, you are right to call this out. Even from my perspective, what do I see? I see a 2 hour divergence. I see it on the RSI. I see it on the MACD at the same time. Uh-oh, what if this catches a bid here, gets above this level here? Maybe we see something dramatic, get some head and shoulders. But if we're not, hey, some of the best moves don't do this. Some of the best moves do this and then keep going. So we'll have to pay attention, but that 2-hour can roll up the daily. Let's look where that daily's at. It's pretty close to that center line. We might see Mara go test this high up here. We very well could see that go up to this level. So pay attention to Coin. Coin has earnings today. Ah, shit. Take everything I just said and throw it out the window. No, if you're going to make this play, since there are earnings, thank you for reminding me. This here, use an amount you're willing to lose. That's all you have to say. Use an amount you're willing to lose. That's one of the best tips for trading around earnings. If you're gonna do it, just say, hey, if I put $2,000 behind this, I better be ready to lose all of that money, because this is gonna open up maybe lower, and then you won't be able to sell that position. It'll just hang out down here. You're done. Today, Zillow has earnings. Don't talk to me about Zillow, Matthew. Don't even talk to me about it. No, I'm just kidding. We can go look at Zillow real quick. I'll look at Zillow. Remember, this is the guy that screwed me. That sounded wrong. This is the one that obviously was not good for me in the past. This is one of my biggest losses, right, in the market about a couple years, maybe 3 years ago. And what are we seeing now? Well, one, you're seeing the potential for a divergence on the 2-hour, but also you're seeing, what if we're completing a cup and that's just a handle to head down? So I would not be trading around Zillow, and you guys know why. I will not ever trade around Zillow around its earnings anymore. It's just still bitter about it. You know what I mean? Still bitter about it. 10% contingency. I mean, all right, let's look up this. I gotta. Let me try to get that, make sure I'm on my premium so there's no commercials or anything like that. I don't want you guys getting any commercials on YouTube, any ads or anything like that. We can't have that. So that's why I buy premium, just for you guys. Give me 2 seconds here and we'll get back to chatting, my friends. We'll get back to chatting, but just give me one moment here to fix some stuff and make sure that we are able to watch that. All right, and if you're new here, make sure, and if you've been here, you got to like the stream. You got to be liking that stream, and if you're not new here, or if you are new here, then you might want to subscribe. You might want to subscribe. We are live every single morning. What does that say, upcoming? Oh, this is because my stream kind of messed up this morning. I'm going to get that off my channel real quick, too. Alrighty. We are switching back over off of that onto my account where we can watch things without it. Doesn't that sound better? It always sounds better. All right, let's get off of these for a second. Let's go back over to the SPY, see what people are doing. Looks like we have a little bit of a struggle here. We can put this on a 5-minute for now and just note one thing here. Technically, we're in positive territory as of right now. Now, that looks like we could roll down. Little divergence right here for this pop. Okay, 5-minute divergence led to a pop right down towards that weekly expected move. Now we'll have to see if something bad is going to happen. Let me get this set up. We're almost ready. I gotta get it better set up. Maybe if I get my... Boom, that's where it's gonna go, but we're gonna focus on these charts for a little bit. Coin earnings, most likely they're after hours, but let's take a look where that earnings is. God dang it. Thursday after hours. So tomorrow after hours, you'll get that coin. And if you're from a different country, well, that might be Friday for you. We'll have to see. But right now, you're looking like tomorrow after hours. All right, 30-minute wants to get a curl up here. Just be aware, any curling up. we gotta still pay attention because we're still pretty deep in this negative territory. So we need this to get positive. We need this to get positive. Well, the VIX tell how Powell is doing with the talk. The VIX is going to tell you by curling over the 2 hour again if we're going to see positivity. I see the 30-minute going down. So if we're negativity, 30 minutes going to turn back up, and we'll watch out for a divergence for the real pop that could be coming in the stock market. Now, that being said, we can watch the 2 hour here, see that curl down. If that curls down, where is it? It's negative territory, so we might see that drop back off. Now, we can still pay attention to if we're going to get a lower high, 2 hour drops down. What if it creates a triple divergence down here? At any point, if this curls back up into positive territory, it's going to have triple divergence. So if it wants to drop off dramatically, it's going to have to get rid of. It's not going to complete any of those divergences, right? We're going to see this thing just, really pummel into the ground. So be aware of this type of thing that could happen. But if that doesn't happen, then you might be getting a huge surge in price action. Now, the other side of that coin is if we see selling come in, 30-minute pops up, look for that divergence up there. But volatility on the 2 hour looks like it wants to curl down while the 30-minute wants to curl up. So some kind of bounce looks likely here, but we're still open to the downside. 30-minute divergence down here would be awesome because then you'd have a 2 hour divergence down here, a 30-minute divergence down here, and that will really gain some steam if you can buy up from there. SPY back to 505. We'll have to see. We'll have to see. Now, we didn't technically touch either of these daily expected moves yet, and we're getting towards the end of the day. So what if we see a rapid move up or a rapid move down? We'll have to see from after the speech here in about 8 minutes. By the way, Coinbase up 300%. Look at that bad boy. That's awesome. Well, JS, I still believe the banks are under pressure. It's just they're getting bailed out in every way possible, right? It's like this small bank fails, big bank buys it. This small bank fails, big bank buys it. All you're doing is creating a monopolized banking system, which, as you would probably argue, is going to lead into some kind of digital currency that they're all just going to have power over. I think that's what you would maybe say in that scenario. Now, Paracosm has a bad feeling, and that's why I'm hedging against any play to the upside. But as of right now, Microsoft looks too good on this 2 hour to not try it out. Yeah, you think that's the point? Okay, good. Well, good. I got a brain up in between these ears. I've got a brain in here. I want to be bullish, but the Schwartz. Yeah, it was difficult. It was difficult, okay? Like, I know I wasn't live while I was watching stocks throughout today, this afternoon, or this late morning, early afternoon. The thing that was really difficult for me was being like, holy crap, we actually might go up from here. Like, I had to shift my thinking, and that took me a full 30 minutes. Tesla back to 185. You got to see if this 30-minute can curl up. If that can curl up, first of all, don't get faked out. All right, if the first move is up, pay attention if that curls right back down. You're still right by that positive territory. Curling up's a good sign. In positive territory is a good sign. But you are in the middle of an event, so just watch. Because if this just does a tiny little pop like this and rolls back down, you're probably going negative. And remember, Tesla, even though it could use the top side of its weekly expected move to go higher, there's only a 32% chance of something like that happening, really. Now, this crossing up on the MACD, it starts to, the probabilities start to go up a little bit. But as of right now, there's a 68% chance we land right in this area, and there's a 32% chance that we land above it. SPY wants to do something crazy. This is what you're going to most likely see. You're going to see it pop up. Now we have to look if that is able to go positive. That's going to be a big moment, because by the time you get to this area, you can go positive and you see there's resistance right there. There's literally resistance right there. So you need to break through that. Let's see NVIDIA. NVIDIA curling up as of right now, seeing some buying up right now. 5 minutes until he talks. So, I mean, honestly, you'd say the direction now looks like people want to buy this thing up, right? It looks like for NVIDIA, it needs to be bought up here, or it wants to be bought up here in this zone. So what if he just comes out, gives a dud, and says, we're still planning on cutting rates in 2024. Okay, boom, stocks go higher. Market closes above the weekly expiry move either side. What would be your take for the expiry? How would it go? It's still able to pull back down even after a Wednesday. But as you get further and further away from it, it means you're most likely seeing a 2 sigma move and you're probably not going to land inside of it. Now, right now, you're seeing... So overall, what I'm getting at here is if the Qs are not going to lose this weekly expected move, then I would not expect Tesla to get back in its weekly range. Why? Because the Qs are most likely going to be going up from here, right? You see it going up right now. So that would tell me, well, Tesla has a chance to go up from here, and it's going to get further away from that move. And since Qs are at the bottom of its move, while like Qs are at the bottom of its move, while Tesla's at the top of its weekly expected move, it actually, if the Qs gain some steam, leans even more towards a push higher and using that as support. Now, that's not necessarily a probabilities game. That's just connecting the dots a little bit. So all I'm doing with that is connecting the dots. If the Qs don't want to break below its weekly and the Tesla's testing the top side of its weekly, well, the Qs are going to gain some steam. What would that mean for Tesla? Most likely it heads up from here, unless it, completely contradicts and goes against the Qs. And then you have things like Microsoft and all these other stocks that are trying to set up moves higher, and you can take all that into consideration and say, okay, there's a good shot that Tesla's going to make that big upside move again. And then maybe we get a divergence at the highs, and that's what brings us down. Ooh, puts with Coinbase. Be careful. Be careful. You got a 2-hour divergence that could confirm on Coinbase. Now there's earnings, so yes, pretty much 50-50 flip, but SPY climbing to the trend line. So as of right now, we could see some kind of rejection from this area, but you're just now curling up. Now you still have some room to go. We got some room to go here. I want you to be very aware of that. Someone let me know if Jerome Powell's talking, by the way. There he is. We've got him up here. 1 minute, 42 seconds. Let's go, Jay Pizzle. Hard to be bullish with anything. It is hard. You guys, I'm not saying it's not hard. I just told you when I was not live, I was sitting here going, man, do I do it? Do I do it? Do I do it? My signals are telling me to do it. So I'm trying to take my emotion out of it and just say the signals are saying it looks good. Okay, the signals are saying it looks good. Let me take emotion out of it and just say the signals look good. I can take one little position on that 30-minute crossing up. If I see a dip and that curls back up, I can take that and I can have my stop at this low or something. So if this wants to curl up from here, now it's back within its range, by the way. So Microsoft back within its weekly range. So I can just fight my emotions a little bit and just say, trust my signals for now, even though it's uncertain, and then flip back and forth, trade like water. That's all I can tell myself. Good, let's have hope together. And truly, I'm not even going to say a word like hope, you know what I mean, Miles? I'm just going to be like, I am trusting my signals here. I am trusting my signals. I am taking all other things out and saying my signals look decent here. I'm out. I have plenty of reasons to take this trade. Plenty. I was able to come up with 5. I was able to come up with 5 reasons. So there you go. Taking it. This could go the other way on me, and that's perfectly fine because I get stopped out here. And if that curls back up down in this area, okay, I can take that play if we see some kind of quick turnaround. All right, we got about, what, 1 more minute? Look at that 2-hour. Want to curl up. Could go positive, guys. So high or low might be the scenario here as long as Jerome Powell doesn't rug pull us. If he comes out and says inflation's bad and we need this, but it seems like they're going to stick with the same, hey, we're still paying attention to the data. Inflation's fine. It's under control. The banks are fine. Some of them will fail. The big ones will buy them, so then we can control how much milk you buy at the store. Come on, who'd you vote for? Oh, your card's off. You don't have any digital dollars anymore. Oh, God, it's a crazy, crazy world, isn't it? He likes his job. Yes, he does. Great stay. We need more data. Yeah, that's pretty much it. Lots of buying coming in. Yep. Yep. Oh, and then the selling comes in. All right. Let's go get Jay Pizzle up on the screen here. Make sure that the sound levels are good for you when it does start, guys. Make sure I'll ask you again in a moment. I know we can't hear anything just yet, but 60 is usually my level here. I think I could put that on 50 actually, and it'd be fine. I'm on CNBC. I hope they're not too far behind.
Good afternoon.
Same spot. God dang it. Their sound quality is so bad.
Remain squarely
I'm going to turn you guys up on there.
Mandate to promote maximum employment and stable prices for the American people.
Sorry if you guys can't hear. It's just...
The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments.
Okay, that wasn't the best.
Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%.
The volatility pops, stocks
Total
go up,
PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Yeah,
the Fed's
I was just looking at
monetary policy
yields.
actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective.
Hey, that's good.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market.
Unexpected weakening in the labor market.
Reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting.
Next meeting.
Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically,
they're slowing what are they slowing QT
to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities.
They're stuck and they're praying this works out over time.
Currently running at about $15 billion per month. Total portfolio runoff will amount to.
It is bullish. They just said they're not going to
the decision to
decrease their holdings as fast anymore, right?
Our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition.
Oh yeah, it's popping.
Reducing the possibility that money
Microsoft
markets
up 2%,
and thereby facilitating the ongoing
check on that option.
Securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping
all right, things are looking good over here now. Hopefully you're able to catch some Microsoft play here. I'm up 54%.
The stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
2 hour looks like it wants to cross down on the MACD for the VIX. Microsoft, everything's seeing huge upside here.
A question to follow up, if I could. Do you consider the current
NVIDIA's even buying back?
Still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand, and there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago, and you see that in job openings. You saw more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and
coughing a lot, sir.
Pardon me. Surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So
Oh my God! This
we
is just
believe it
insane.
restrictive, and we believe over time it will be sufficiently restrictive.
This is
That will be
actually
the question
nuts.
that-
Like, what
that
the
data
hell
will
is
have to
going
answer.
on?
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and
What
expectations
the
are
hell is
anchored
going
and maintained, would you disrupt that for
Expectations are not.
The 2 hour hasn't even
anchored
crossed
are
over on
stable.
volatility yet, and this thing is just
Would you disrupt
ripping.
that for the last half point on PCE?
You know, I don't want to get into complicated hypotheticals, but I would say that, you know, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
I'm keeping my hedge just in case, but what the heck? This is a turnaround, man.
Thanks for taking our questions, Chair Powell. I wonder, obviously Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her.
Oh my goodness.
I wonder if you see that as a risk as well, and if so, what change in conditions would
Oh my
merit
goodness.
considering
Oh
raising
my
rates at this
goodness.
point?
So I think it's unlikely.
It just
that
keeps
the
going.
next policy rate move. will be a hike.
Sad
I'd
man,
say it's
mega pump.
unlikely. You know, our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask what
Oh
would
my
it take?
gosh.
You know, I think we'd need to see persuasive evidence that our policy stance is not
I'm
sufficiently.
going to tell you guys
restrictive
right
to
now, I
bring
made an
inflation
NVIDIA fund
sustainably
play,
down
and
to
it is
2% over time.
printing
That's not
200%
what we
in
think
like
we're seeing,
20 minutes.
as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data, answer to that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
I can't hear the question.
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations. It could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and you didn't mention the idea that it might be appropriate to cut rates later this year, as you have
This is
at previous
crazy.
press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we
Okay.
think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate
Yes, I
to
do,
dial back
JS.
our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on.
Didn't we just have that case for the
I
last
think
3
there's
months?
also other paths that the economy could take, which would cause us to want to
I mean,
consider.
I'm making
rate
money,
cuts,
but
and
this
those
is
would be
stupid.
Two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%, and another path could be, an unexpected weakening in the labor market, for example. So those are paths in which
Amazon Head and
you
Shoulders, if
could
that
see
broke
us,
up, I'll look at it on my other
cutting
screen.
rates. So I think it really will depend on the data. In terms of peak rate, I think
Amazon's
really it's
bullish
the same
now.
question.
Broke above that level.
I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that you mentioned that it would be inflation persistent? Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed
Take it out and buy
to
gold.
the reacceleration in growth?
Silver.
Do you now expect a period of sustained, tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at
Getting
let's
texts
look
and
at
texts and
growth.
texts.
Really,
People probably asking me stuff right now.
What we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an
Trapped
acceleration
bulls and
in
then
growth.
trapped
the
bears.
thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this
bear
inflation,
trap.
we'll have a better sense of that over time. I
Big
don't
move.
know
There's
that
going to be
an obvious
selling.
connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily
Could be.
preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year. Very strong growth, a really tight labor market, and a historically fast decline.
Same, Marina.
So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related
I should sell one
supply
thing
side
to make money
distortions and
and
demand
let
side
the rest
distortions.
ride.
And there's also
That's what I should do.
monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things.
Yes.
So I don't like to say that either strong either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see
Head and shoulders
high
on the
wages,
30-minute. I'll take a
but
look. I'll look at
we
gold on
also
the
wanna
side
see
here.
them not eaten up by high inflation, and that's really what we're trying to do, is to bring the economy back to 2% inflation. Part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Up. There you go.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post.
Gold's about to curl up on the 2-hour above the center line on the RSI and about to
to
cross up
gain
on the
more
MACD.
confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Ooh.
Yeah, I'm not really thinking of it that way. What we've said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Oh God, it's still going. About to hit the daily expected move upside.
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Plus 100%. Selling is when you actually make money.
Steve Leisman, CNBC. If I could follow up on that, what particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing. We have put the thing under a microscope. I will say, nothing is going to come out of that that's going to change the view. I think that in fact we didn't gain confidence, and that it's going to take longer to get that confidence. But confidence, I just think
we're going to do a breakdown after it's done, guys.
What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened, and I think my expectation is that we will, over the course of this year, see inflation move back down. That's my
my God,
forecast.
he is just
I
saying
think
bullish things, man.
Lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation.
Wild day, Mike. Good day.
We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which
if
is sort of
if we hit the daily expected move, we could see resistance with some
rates
selling.
Steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
I wouldn't say that. No, I mean the active tool of monetary policy.
Good job,
is,
Dave.
Of course, interest
You're
rates.
right.
And this is a plan we've long had in place to slow, really not in order to provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
From Bloomberg. 2 questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question.
Ooh.
Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree. It's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time?
Really?
Thank you.
I'm sure my channel looks like that
question,
sometimes.
I don't have a probability estimate for you, but all I can say is that we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably at 2%. We didn't get our confidence in that didn't increase.
I'm going to tell you what NVIDIA's doing.
In fact,
I looked at it on my left
what really
screen.
happened was,
just give me 5 more minutes.
To the view that it will take longer to get that confidence, and I think I think it's the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it.
That's because inflation ticked up, so that's why you focus on the good
That's how we
numbers.
think about that.
What? We don't pay attention to inflation anymore, so while fighting inflation, we don't want to pay attention to
Jones,
inflation.
Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before.
That's a title?
The previous one. It seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now.
You probably got until mid-May
Just confirm whether or not that's a correct reading.
to be bullish
And the Q1 GDP print has
till the next
led
correction
some
or
to
pullback.
start mentioning the term stagflation with respect to the U.S. economy. Do you or anyone else on the FOMC think this is now a risk?
Unless Apple has something to say in earnings.
I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And
The
I
video gonna be
don't
green?
have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your second question was stagflation. I guess I would say I was around for stagflation.
Oh.
And it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from, and in addition, I would say, most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%. And that won't be. So I don't see the stag or the inflation, actually.
Oh, yeah. Daily expected move is where you can see people take profit. This is a massive move. You're going to see taking profit at the end of the day.
Michael McKee from Bloomberg Radio and Television. The vice chair
Good
of
luck,
the
Paracosm.
FOMC said recently that he's willing to consider the idea that potential growth has moved up. And, of course, he's Mr. Potential Growth, our star. Do you share that view? And would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023.
I could see it, sad man.
We saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will
Someone go look at all the live YouTube
persistently
people and
above
see if anyone's
its
shitting their
trend?
pants.
I don't think we know that.
See if anyone's
In terms
really
of
upset,
potential
like they went
output,
very
though,
bearish.
If that's a separate question. We've had what amounts to a significant increase in the potential output of the economy. That's not about productivity. It was about having
It just
more
keeps
labor.
going. This is where you can take
Both through-
profit.
in
You see it hit the
2023,
line.
both through
Let's see.
participation, also through immigration. So we're very much like other forecasters and economists, getting our arms around what that means for potential output this year and next year, and last year for that matter too. So I think in that case, I think you really do have a significant.
Hell yeah,
increase
Dave. Who
in
you got
potential
winning?
output. But you've also got more supply, But those people also come in, they work, they have jobs, they spend. So you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well,
They ain't
you,
trading like
said
water.
Earlier that at this point you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive, and our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand is clearly
that's where
over the past few years.
We'll go over it in a moment.
That's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So
still more.
GDP
Still more.
growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be
makes sense due to the daily expected move.
We don't see
but
that.
This is V shape right here. This is
so that's where we are.
Was there a discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy.
It's trying not to slip up.
Was in the meeting.
I am, Matthew.
I
did just now.
Of persistent inflation that would trigger a rate hike.
There isn't any rule. You can't look to a rule. These are going to be judgment calls.
We don't even get that much news tomorrow.
Clearly, restrictive monetary policy needs more time to do its job.
Yeah.
That is pretty clear based on what we're seeing. How long that will take and how patient we should be.
Thank you, Matthew. I took 100% on one option. The other option's riding. It's at 200 or at 100% on that one too.
Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between whether you start in, say, September versus December?
There's a significant difference.
That's why you subscribe, Matt, give you these red lines that magically work.
All sorts of political events and one that doesn't. That's where the significant difference is. And we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way.
Yeah, the purple one.
The pending election. It just isn't part of our thinking. It's not what we're hired to do. if we start down that road, I don't know how you stop. So,
Welcome, Matt. Patreon, we told you about Microsoft, and the signal could prove to be a recovery.
Mentioned a few times that the labor market is normalizing.
You're part of
Patreon.
Patreon.
Today's JOLT data
Helps out a lot.
that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still
I'm
quite
like
a bit strong.
500% on my options now. I don't know what to do with myself.
Of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked a couple 3 years ago. Essentially, all wage measures have come down substantially to that, but they are not down to where they were before the pandemic. They're still roughly a percentage point higher.
I booked some. I'm going to let the other one ride.
Progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year. I think roughly. So, yeah, I mean that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers.
I'm quiet. That's how you know I made money.
So we've seen progress.
Peace, Brian. Have a good day, man.
Inconsistent.
Not going to stick around for the breakdown. I got you. It's all right.
Overall,
we're going to break this down afterwards. I don't know what he could say to pull this thing down now. I can't hear her, but sleep well, my friend Brian.
Consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck, and suddenly all the things you buy, the fundamentals of life, go up in price,
I'm sorry.
You are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%. And then,
Bernie, I'll go have a beer with you, buddy.
That's what we're
I'll
doing.
have a beer with
know
you.
That it's painful.
All right, I'm going to go grab a beer.
The dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8. Now it's at headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, but it's also in this case unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation.
He said it different this time. We're screwed.
Is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And so this was to do with the shutting down of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. We have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios.
Good day.
For taking our
Good
questions,
day.
Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are...
I'm sorry, Junior.
there are a number of places in the
I
economy.
really
where
am,
there's
man.
a-
You know
where
I
there's
want
just
you to
lag
win.
Structures built into the inflation process. And
Learn from
housing
it,
is
my
one of
man.
them.
Learn
So
from it.
when you have,
Somehow.
When someone
You want to ask me questions? I'm here, man.
a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, you know, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation.
NVIDIA is doing something
Assuming
huge.
that
Please
the
stick
market
around
rents
and
go
like the
up.
video because NVIDIA is doing something
What
very
will be the
important
exact
here,
timing
even if
of
it rolls
I
down.
think
Very,
we've learned
very
that the lags
important.
are longer. We now think significantly
We're going to go over it in a
longer than we
moment.
thought at the beginning. And so confident that it will come, but not so confident in the timing of it.
We're going to
But
see a
yes,
handle
I
here,
expect
guys.
that this will happen.
Thanks.
Back up, maybe.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets, at least, have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out.
2 hour just
Feels like that
now
may be
crossing
ending in
on
2024
volatility.
based on some of the economic data from Europe and the U.S. and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So that you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries,
Yes,
that are now
mindset mastery,
considering,
yes.
rate cuts, is that they're just not having the kind of growth we're having. They have their inflation is performing about like ours, or maybe a little better, but they're not
probably
experiencing
not.
the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think, we haven't seen, in addition, for the emerging market economies, we haven't seen.
I'll answer after the video. I'll go over volatility as well,
more
Matt.
frequent
That way you
20
can
years
get the
ago, 30
full
years ago.
assessment
And that's,
since
I
you're
think,
new.
partly because emerging market countries, many
Yes.
of them have much better monetary policy frameworks, much more credibility on inflation, and so they're navigating this pretty well this time.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy, or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably a significant.
I'll say right after, Mark.
dislocations
I think we
somewhere in
pull
the
back
economy
and create a
to
handle for
get
NVIDIA, if that
inflation
helps you.
all the way down from the very high levels
5 minute
we had
chart.
at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2%. sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without,
All right, I'm selling it.
without
I can't do it.
significant dislocations in the labor market or elsewhere.
I'm making the money,
Speaking of
guys.
dislocations in the
Selling
labor
it.
market, in terms of cutting,
Keeping
you
other
said
ones, but
that
I'm
if there were
selling a
weakness in
lot
the
of it.
job market, that could be a reason to cut rates. So if the unemployment
Made
rate
300% on my Nvidia
4%,
call.
but
I'm
inflation
good. I'm
not
fine.
back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but, it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be
Thank you, Matt.
to consider cutting.
I'll teach you about them, Matt, since you're new. We'll really talk about these stocks, guys.
Circumstances, not just that one.
So quiet for me.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You
Yes,
said
Paracosm.
that broad and material
Thank you,
changes are
Junior.
needed for the Basel III
Thank you for the
proposal,
good sentiment
and
there, Junior.
you've mentioned that
Appreciate it.
reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal?
Apple's
or
after
a
hours
move
on
to finalize?
Thursday, I thought.
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III Endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. Nothing. No decisions have been made. I'll say again, though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to make progress on those other agenda items?
True.
There's no mechanical rule in place there, but I would say that the Basel III process is by far the most important thing, and really is, I think, occupying us at this time in terms of what we're moving ahead with.
Let's go to Mark for the last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around the country where they have their own economic staff, not the people who work here at the board. They're different people, and so each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse. But and in terms of dissents, we have dissents, and a thoughtful dissent is a good thing. If someone really makes you think, that kind of thing. But all I can say from my standpoint is I listen carefully to people. I try to incorporate their thinking, or do everything I can to incorporate their thinking into what we're doing. And I think many people, if they feel that's happening, that for most people, most of the time, that'll be enough. But I'm not. It's not frowned upon or illegal or against the rules or anything like that. It just is the way things come out. And I think we have a very diverse group around the people, frankly, more diverse than it used to be in many dimensions, more diverse from the obvious, gender and demographic ways. But also we have more people who are not PhD economists, So we have people from business and law and academia and things like that. So I think you actually do have quite a good diverse perspective. I think all of us read these stories about a lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question now. Thank you very much.
All right. We're going to do a full breakdown here, guys. And I was biting my tongue the whole time, really, because I just wanted to go talk about stocks, but I know we want to watch Jerome Powell. I don't know why I'm all glitchy right now, but we'll figure that out. Let me see if I can fix something up. Get out of this for a minute. Let's get out of this for a minute. All right, we can kind of move now. We can kind of move. Your boy needs a new computer. All right, so what happened? Well, we said Jerome Powell can give us a cookie, and that's going to curl up right here. Let me see if I reload this, if that helps. I don't know if this will help, guys, but we'll get through the breakdown regardless. Remember, this is our nightly video here for YouTube, okay? So we're going to be done after this, so we're going to give a full breakdown of what's going on as of right now. Watch the close, see how things close up. I'm even more frozen now. What the hell is going on? My accounts were lagging too, so that was scary for a second. Okay, what happened? Well, the 30-minute curled up on this MACD, and you saw that follow through as of right now, not even going to positive territory. And stick around for NVIDIA. I might mention that very quickly. Actually, I might talk about NVIDIA first here. Talking about where we're seeing the resistance come in, I want you to look at this 5-minute chart. Okay, so if we were wanting structure to head higher, it is actually here, right? We are completing the full cup. And then now we can make some kind of handle, touch into the zone, and then be on our way. So be very, very careful trying to play any downside here, unless we're going to see some crazy bad news. But tomorrow, I don't even think we get that much data, right? So the earnings tonight probably going to be a little bit important. Remember, this 2-hour curls up. We're probably off to the races. I would even go as far as going like the 1 hour. If that's going to curl up, then we're off to the races. And right now we might just be building that handle to grab more liquidity to get past this important gap. I just wanted to point that out for NVIDIA first thing. Now the SPY, right, curling up positive territory. That's what you're looking for here. Anything curling up into positive territory, the hourly actually something I would pay attention to here. Just know that this could just be profit taking. That is a massive move. And a lot of people made a lot of money. You just heard me. I took some profit as well. So I'm one of those people who's causing the wick to go down. So just pay attention to that, because this could just be some kind of 5-minute pullback, and then we're off to the races again tomorrow. Looking for those MACDs to curl up into positive territory. This one didn't even get to the daily expected move, but the Q's told you something important. It retested the weekly, and then it started to turn back up. That's why I was overall posting the thing about Microsoft as well. There were other things in the market that were pointing towards some upside. And therefore, that's why being a part of Patreon could really help you, just because I posted the Microsoft thing, and then literally in the next hour, it went up 1%, and now it is just, it's moving. And we're going to get to Microsoft in a moment. Apple, we're still waiting for that confirmation of the next move higher. Let's dig down. Let's dig into this, see if the 30 minutes able to cross. It's able to cross. If that can go positive, we're going to get up in a sell zone before earnings. Remember, that's a 50-50 flip. And Apple, if it produces good earnings, we're going to, oh my God, we might see a stock market explosion higher. So be very, very cautious. Remember Tesla, we were talking about how the Qs are at the bottom side of its weekly while Tesla is testing the top side of its weekly. So therefore you can kind of connect the dots and say, hey, Tesla can see its next move higher as long as the Qs get that bounce, and boom, it bounces. So we're seeing it cross over right here on the MACD. You're seeing that first green impression. We're right by positive territory. It looks like Tesla's about to make the next move higher as long as we can go positive. I know it's very, very close, but positive here. Now Tesla, if you wanted upside for that, 205 is what I'm really paying attention to. The upside or downside, if you want the upside downside for any stocks that are having earnings, Apple or anything like that, just know that we have the weekly and monthly expected move. So if you're expecting Apple to go ballistic to the upside, now you have a monthly expected move as well on Patreon. And that link is down in the description. Now, here's something on Amazon. Remember, we were talking about if it proves to be some kind of 30-minute divergence. If we cross back down, we could take out this low. So just be careful. We're still trading like water. That's why I took some profit. If this was going to happen, then that might happen across the board. So just pay attention, because there is still a setup here. Now, this is a very bullish move. Most likely it continues, but I want you to be one of the people who is aware of downside in an environment like this, where if you curl down, now you have divergence and negative territory is there, and this could flip around. I don't think it will, but I want you to be open to it. NVIDIA crossing up on the 30-minute for the first bar here, for the first green impression down here, we're above the center line. I think we're going to make that 5-minute handle and turn back up. So if you weren't able to catch any moves, I would really be looking if 5 minutes start to get down towards the center line and then curl back up. That would be an opportunity to get into a move if you're looking to do something closer in the expiration, from an expiration standpoint, because I know you guys don't do the month out plays like me. Now AMD, this thing just had earnings. Let's see how it's reacting. Well, look at this. It completes the cup as well, right? This is where it completes the cup. Now we make a handle. We had higher 5-minute, going to be telling there. 2-hour can have that double bottom, so we could see positivity. Meta still very important to take back this 453.08. Be very, very aware of that. We have to take that back and stay above it, in my opinion. Okay, that's a very, very simple breakdown, but keeping it simple will really help. If it's not above this, then we can just roll back over and go negative, even on a 30-minute here. You can see that. But as of right now, you'd say, hey, cup, get the handle. Okay, now we burst through that point there. I can't believe they said no stagflation when we literally have stagflation. Microsoft, this is the picture that we posted to Patreon, and it hasn't even confirmed yet. Now, the 30-minute allowed me to get into this move a little bit early. I got into that move with a small position, and then I took 2 positions on this. I took another one right here, one with a little closer expiration. That way, if something crazy did happen, I made it. But I also had a hedge in volatility in case I was wrong, right? That's very important to point out. It's not like I just said this and it's magically going to go up. I still had that hedge because I know that the probabilities are with me, but that doesn't mean I can't be wrong. So now I've taken some off the table and I'm letting the rest ride. But I will take 300% today. That is perfectly fine with me. I wish I took a bigger position, but 300% is plenty for me. If the Google wants to make that move higher, what were we talking about? The 30-minute needs to roll back up into positive territory. We're getting that roll up. Looking a little bit flaggy here still. You need better buying here to go up from this level. Now, one thing to mention for Google is if you are a part of Patreon, you know that most likely Google still might even head up from here. And that's just because we know where the weekly expected moves are. So if you want to get those weekly expected moves, Google is curling up. Maybe if you want another confirmation, you could say hours right is still in positive territory. So if that hourly curls up, boom, we got the next move higher for Google kind of confirmed there. Make sure that's not ripped away on Friday. We still get data on Friday, and they're saying dependent on the data. I think it follows through. I think at this point you'd say follow through is coming. I think it would be, unless people say let's wait for the next piece of data, but that is a very big move, guys. That is a very big move, so you have to be aware of it. Volatility and what was it? Matt, if you can remind me what those questions were. If you can remind me if you had any questions or anything like that. So one thing to point out from here is the 2-hour just crossed. Okay, the 2-hour crossed. I mentioned that while he was talking. Just be aware that if the upside tomorrow keeps coming and then we see volatility gaining some steam, we might see some 30-minute divergences like on Amazon that kind of tells us what Microsoft told us for this moment, and see where volatility is making a 2-hour triple divergence, very, very strong signal, and then that's able to go positive right when Amazon's making that 30-minute divergence. So we will pay attention to that going forward. But Tesla just looks like it needs to curl up on some MACDs. It's holding above its weekly expected move, and I think that it could turn to the upside here. 2-hour turning over briefly. I would say, Tesla and Google, the hourly is still in positive territory. You can pay attention to that. Earlier sign would be 30-minute crossing up, which it still has a tiny green bar right here. So you want to see some follow through, but it makes sense. I try to do 14, 21 days. That's what's up, Miles. That's what's up. The lines, how do you know it would be a sell? Okay, so these lines, yeah, that's right. Okay, so these lines here, and usually we're good about saying this on the YouTube videos, explaining it for new people. These lines here aren't just magic lines that I come up with from, my gut feeling. This is actually what the options market priced in for the day. So the red lines are always going to be the daily expected moves. That is priced in from the options implied volatility for the day. So that's how I know that some profit taking or selling can come in at this area. And if you go past that level, you actually have a 68% chance for a drop. So you notice we went above that briefly, 68% chance we land back within it today. But tomorrow I'll get new ones, and the new one could be way up here, and maybe we go up to that tomorrow. We'll have to see. And then we'll pay attention if we're creating another point of divergence or something like that up here. That would be crazy. I don't think that's going to happen. I think we're going to just start to go up from here, but I could be wrong. It's just the reason I'm really leaning towards that now is this daily is going to have some steam behind it if it can cross up tomorrow. And in the futures, it's already crossed up. So the fact that we're not dramatically, heading lower to revert that in the futures have already crossed up on this MACD. So now it really looks likely. I think that this monthly expected move for May might even come into play, but we're still paying attention to the signals, right? I could flip that whole assessment tomorrow based on what happens, but it looks like we're going to make a move higher from here, and this was corrective at this point. I'll pay attention in case we get a lower high, but I think with that sentiment that came in with that, it can get pretty bullish. Where do I pull those lines from? I calculate them. So I get the implied volatility. You just get the implied volatility from pretty much anywhere. And I look at a certain expiration and I calculate it with that expiration and that implied volatility and the closing price of the stock at the end of the day. So that's what I do. Now there is discussion about when to pull the implied volatility right at, 259, right at 3. It changes on some platforms at 330. I like to give it some time, let it calculate a little bit more, and then anywhere between 330 and 4, I'm pretty comfortable making that range, and it's really worked out. And you can see it happening right in front of us. So something we could do now is I'm going to leave us on NVIDIA just for a moment, and because that thing is starting to fade, that move, but that's perfectly fine. We kind of expect some selling. That is a huge move. And I bet a lot of the people who are saying the crash is coming are going to say, look at the sell-off at the end of the day. Don't buy too much into that unless you're seeing the signals that volatility is going to turn up. Right now, what you're seeing is a 5-minute that is pretty positive in this moment, right? Pretty positive. And you see the cup. It's a very blatant cup. And then we come down and we get that handle after touching into an important zone. And then we head higher. 68%, it's because we explain it in the course pretty thoroughly, but it's a normal bell curve. So if you understand, if you took business, like statistics in any kind of way, and it's a bell curve, you just know it's a normal bell curve. We talk about it in the course extensively. In the course, 149, right? If you want to, apparently today, you would have, if you were following trade like water and following the signals like I was, which, hey, you're more potential to do that if you take the course, 300% today. I'll take it. So course can be very good for you. I don't want to push it on anyone. I don't want to be like, oh, you took a loss and now you should buy this course. No, I think you can learn a lot. And overall, when you take a loss, it's not immediately take a course. It's what did you do wrong? Really be honest with yourself. And I think that would be very, very good. I know you did, Junior. That's why I was like, man, I was hoping you'd be making some money today. But hey, take it in stride, take it on the chin, learn from the experience. I don't want to come at anyone for taking a loss or anything like that. And that's why I'm trying not to be like, woohoo. I just kind of stayed quiet and had that. I don't want to. It easily could have ended up down and I could have lost money. And I'm going to just be grateful that I made the right decision. I know other people might have seen things differently. And I'm very sorry that didn't work out. That's it. And Matthew, we are okay. I'm Googling bell curve. Yeah, look up a bell curve. You'll see it. It's one standard deviation away is what we're calculating, Matt. We're calculating what the expected one standard deviation move up or down would be. It's part of the game, Junior, and I love it. I love hearing that statement. That's awesome. But I just know this. I know in the stock market, a lot of people lose money. So it kind of is like I'm happy. But I also, especially now that I do YouTube, I'm like, I have empathy. Like I have a soul, How long have you been trading? Technically, I was a fundamental trader. Like, what was it? What am I? 32? Am I 32 or 31? I'm at the age where I forget what age I am, probably because of my daughter now, but she takes up a lot of space in my brain. Pretty much since I was about 20 years old, so about 10 to 12 years. And back then, I was really fundamental, looking into trying to do the Warren Buffett, and then I got slapped in the face with a company that I really believed in, and they were fraudulent. So that's why their numbers were so good. And then I switched to the technical side probably about 3 to 4 years ago. 3 to 4 years ago was when I knew a little bit, and I had taken some courses, but that's when I got obsessed with it. I got seriously obsessed with this type of stuff. And if you're saying this is bull trap, by the way, let me take a side note. Market on the way down, we would expect profit taken. That is a massive move. What you need to pay attention to is the last 20 minutes or so. You're gonna see profit taken with a move like that. Now we have to see, is it able to curl back up or something like that? And Nvidia I'm leaving it on Nvidia just because the structure here, if this can curl back up and break through this level, you have a huge cup and handle, okay? A huge one. And this could be printing soon. I'm going to take it a little bit lower with the breakout maybe here. We just pull this up. You could see a move all the way back up to around 890 from here if this completes. So I would be very aware of this. But yeah, I got obsessed with technical analysis. It wasn't until about 2 years ago that I started to form my own strategies, my own thinking, and I put together a lot of things that make a lot of sense. And I think people are really enjoying it because that's what I hear from the course. So I appreciate you guys telling me that the course is good because, I just want it to be as helpful as possible for you guys. And then at the same time, it's like from there, I just figured out now I have to learn how to trade in a bear market because I got beat up by Zillow. You know what I mean? So it's always a learning curve, always a learning curve. What SPX looks like a cup and handle the other way. Let's look at this. If you wanted to have the cup and handle, I'd say like somewhere around here would where you want to make it. Now we can use this as support to head higher. This could be a cup level as well. It looks like a cup and handle the other way. I don't see that because we didn't come down to a point of 497.50. We held up at about 500. So you really wanted to see a lower level for the cup and handle down here. We're still paying attention to downside. We're not getting cocky or anything like that. That's why we take profit. We know that things can go against us and we don't know everything. But this is a lot of selling coming in, and that, I'm really thinking this is going to be profit taking. And this is going to be a point where people sell out of these moves down at lower levels, and then it ends up going up once they catch some more buyers. But that's a pretty dramatic sell-off. Pull up a 2 hour. Yeah, if that could cross, then you'd be more confident. But I expect a sell-off here a little bit. I already took profit, so I'm in the green overall. I'm just letting the rest ride. But my honest opinion is, unless Nvidia gives up all of this stuff, unless Nvidia starts to curl over the 30-minute like down completely again, I won't be convinced that this is going to fade. I'm just not. The structure here, I have to trust it for now and just say, hey, this could pop back up. Now, I already sold my Nvidia play, by the way. That's one of the ones I took off the table. So just so you know, I took profit right here. I literally took profit. I was like, yeah, I'm out of this thing. I know it's going to pull back. It looks like a handle could form. I even said that while he was talking. I said, look, cup and handle for Nvidia 5-minute. I tried to be a little subtle with that to just let everyone watch. But as of right now, hey, we're dipping down on the 5-minute. But why? That's maybe what you would look at. So if anyone has why. I think J Powell effed up, in my opinion. That very well could that could be it too. That could be it. Based on the signals we're getting here, no real reason to see anything go below the previous low. If we start to break this low, it's game over again. Like if we start to break this low, it's bad. Qs, if we start to break this low, it's bad. I want you still to remember, yeah, the Qs are hitting the 0 line, right? They're at 0.07 negative, right? But the thing is, this is where we broke out from for that big move. If you want to say, hey, here's where that gap would fill, well, look where we broke out from. Well, that gap fill, okay, that was a big move. This was kind of a little bit angled, but this is vertical, and therefore testing this level is perfectly fine. And if anything, you got excited. Maybe you wanted to connect all this handle up here or something like that, but this still could play out, and I want you to be open to that and not get too freaked out. Overall, it was bullish, so. No, he's not saying 100%, and he's also very confusing. So to say when we're fighting inflation and the inflation numbers are coming down, we're really paying attention to these numbers and we're going to cut the rate. But when the inflation ticks back up, we're just going to hold the rate where it is and not think about raising it at all. I think that's a lie. And there was one part in there where he gets asked if they even discussed any kind of rate hike. And did you notice that the very easy, good answer, if he was being honest and the answer was truthful, would be, "Hi, did you guys mention cutting or raising rates at all?" No, we didn't. If the answer was no, he would have said it. But the answer is yes, they are talking about rate hikes. That's what that tells me. Just looking at the psychology behind it, that's most likely what that tells me. The probabilities that they are talking and someone is bringing up rate hikes is there with this data. So therefore, we would say, why is he lying about that? Okay, I think they might be worried. They might have to keep these rates really high. He shut down stagflation right away, but we're already there. Mike agrees. That's good. Georgie, what do you got to say? Yeah, he sounds political and delusional every meeting. He denies every fact from the economic data. Yeah, it's funny when the question throws a piece of data at his face. And the other part that just kind of pissed me off a little bit, even though I made money today, it still makes me upset. It's like, okay, so he said, if now in the future, if we see inflation tick up, we will react, and there's potential for us to react to handle that problem. We saw inflation tick up. He's said this forever. He said this the last 2 years. And then now we had 3 months worth of multiple pieces of bad data. And now he's like telling you that he's going to do the same thing, but he's not. So you just know that he's not. He's not going to do anything. They're not going to raise rates, but there's probably someone in there talking about it right now. And if they ever sneak a random rate hike in, oh, this market's going to throw up. I'm not leaning towards that. I think they're just going to keep it where it is, hope it works out, and then something's going to break. I think they're praying this works out, and they're trying to be as confusing as possible to keep their jobs. And then they're going to blame, honestly, then they're going to blame the next president, whoever it is. Yeah, inflation is transitory. Inflation is transitory. We're not talking about rate hikes. We're not talking about rate hikes. Also, the other part that I thought was funny was they mentioned housing rates, right? They mentioned housing and how interest rates are very, very high. Rent is very, very high. But the important part was interest rates are high, and that's supposed to clamp down on demand. We're not seeing that, is what the person said. He kind of threw it back at her and was like, we are seeing it. It is doing it. I'm telling you right now, we're not. I'm telling you right now, we're not seeing that slow down demand because demand has been bottled up for so long because people are holding their 3% rates. So any house that comes on the market, at least where I'm at right now, just gets eaten up. Now, I know other cities are different, but he actually did literally say it's different this time. The SPY, most likely you need to close above a certain area up here. We would say, you know, this area up here, if you want to go to all-time high, you got to take this out. But right now, I would say any kind of hold, probably it would be right here. Do you see how these dips down? I would say just right in the gray zone. If we take 508, that's fully bullish. It's more in this case. Most likely we head up from here. I would say we definitely do not want to lose 500. That is a big point. I know you were looking for an upward number to pay attention to be bullish. This should cause bullishness right now, and you don't want to lose 500. If you lose 500 after this big of a move, something is very, very wrong. And now the reason that we could be seeing an upward move is because this MACD is still so close to crossing. I know it didn't for a brief moment. That's a big rejection. I'm still not going to be fully convinced that this thing's not going higher. until I see something proven, until I see at least a 15-minute goes into negative territory. Then we'll take out 500. You don't want to do that. And then we can set up a divergence, but you have the potential to go test the 200 if that happens. So scary, scary, scary. Oh, and I think I can put a payment plan in for the course where it could be like, $50 a month or $25 a month if anyone's, I don't know if anyone's even interested in that. I don't know if payment plan would really help people, but I was like, hey, that's good. You pay 25, you get the info, and you go from there. You get to make money instead and then just pay monthly from your gains. VIX is over 15 again. That's true. We do need to be checking in on the VIX. Feels like a bad reaction. Now, this is the only thing that you have to pay attention to with volatility. What do you have here? Well, you have this little kissing of this MACD. They're kissing right now. You see it? Now, what could happen from here? Most likely, because we are in negative territory, and after that sentiment we just saw, most likely this heads down. But I would pay attention to tomorrow, because we could get a lower high tomorrow if we go ballistic, see the VIX turn back around. Guess what? Triple divergence on the 2-hour. So we're still open to crash scenario. I'm just saying this is a very bullish move. The fact that it's selling off makes sense, but I just want to pay attention to this as well. What's the dollar doing? Well, the dollar's trying to climb, but immediately dropped off. Now it's climbing a little bit with that selling coming in. So I'm really going to pay attention to NVIDIA, guys. I think that's the best thing that you can do is pay attention to NVIDIA for now. See if that cup and handle is able to prove. Right now, what are we doing? Well, we're trying to prove maybe some kind of cup and handle for the SPY. If the SPY crosses up on a daily MACD, it's a very bullish sign. SPY call lottos. Well, hey, according to these weekly ranges, you could get all the way up to 517. So the next H word. Yeah, I think if they put Trump in, they rug pull everything. Like the Fed just does something right before he gets into office, honestly. And then it's like, oh look, the market was good with Biden and bad with Trump, but we'll have to see who actually wins. I think the reason for the move up wasn't very convincing, though. I know that isn't technical, but it's not. It's the same stuff we always hear. It's the same stuff we always hear, but the thing is, that is a big, big sentiment there. That is a big, big sentiment move. That is a big push. You don't have any divergences in it. Really, I just have to pay attention if like a 30 or 15 minutes starts to fully roll over into negative territory, but thank you. Bought NVIDIA at 834 and sold it back at 842. There you go. That's simple. Good job. Nice little play, Tina. And I'm sorry I couldn't get into it right away. It's just I know that we need to be watching that. It's important for the macro side. It's hard for me to click around, but I am looking at stocks while I do watch. So, but I'm proud. Thank you. $1,000 in less than a minute. There you go. Congratulations. Great play there. You got to see where NVIDIA. Where the hell did I get in on NVIDIA? I actually got in on NVIDIA literally at this bar right here. So I got in at 821 and sold at 854, I think. So it was a good play. That was my big winner, and I was like, I'm not going to risk this. This is probably going to be a cup and handle. This is probably going to pull back and then break through tomorrow. So data. Yeah, we get more data on Friday. And maybe something to do now is I might pull up that data real quick. Just to see what's expected to happen. Because we expected what's his name? Powell to do this for us. Now what can we expect? Well, non-farm payrolls, are those ticking up? Those are actually supposed to tick down. Slightly deflationary there, right? And then unemployment rate supposed to come in even. So if unemployment rate also, we'll have to see how people actually take the unemployment. Unemployment rising can be seen as a bad thing, but unemployment going down from here actually means a stronger labor force, right? So they're paying attention to the jobs data. And then we get ISM services PMI, which is supposed to tick up a little bit there. So we'll pay attention to that going forward. I'm feeling worried now. Why? Well, we're making structure. We have no reason to take the second play on NVIDIA yet. No reason yet. Apex one-day pass. Oh, sorry. I thought you meant like the video game. I bought Apple at the dip, up already 600, but not selling, holding for the earnings. Yeah, you can hold for earnings. I just think that's a kind of ballsy move. I would really pay attention to where Apple's at before the earnings, by the way. And the 30-minute looks like it wants to curl down for Apple. Apple actually looks a little bit uglier here. If that could have gone positive, you could have made a divergence up here, and that would have made sense. But now you're beating down. If you want to hold before earnings, that's perfectly fine. But this is really beating down. You just hope that that's profit taking. After giving it back, I mean, you still need to pay attention to this. The 2 hour just rolled over today, right? Like, or it might have been last night or today. I think it was yesterday, just at the end of the day there. So what you want to see is this fully curl back up. The 2 hour is going to fully confirm the next move higher. You're just looking in the shorter time frames for some kind of structure. So maybe going into like a 15-minute or something like that will help. Look at this curving. And then if this can break down, then give you some kind of divergence. You could see where your weekly moves are and things like that, which you can get on Patreon in the description, and then see if an upward move can come from that momentum dying out if you want to be risky before earnings. But I am in no way wanting to be risky before earnings. That's why I took profit already. And that's why we're paying attention to how we can lose. And how we can lose, well, if these 30 minutes start to roll back down, it's looking like this was a fake pump. If this 15-minute rolls back down, maybe it wants to make a divergence and I could take another play on this. But I would have to say this seems like still a handle for now. And we're red. That's why I was trying to tell you in my assessment right away, like NVIDIA's going to create a handle. So we're probably going to see pullback. We're probably going to see profit taking. Just be a little cautious with it. Everything turning down. Let's see. Q's pointing down. SPY pointing down. That's why I have my hedge in place, right? My hedge is there. So, and I already took profit to the upside. I'm up 300% on, I think more than that on the entire day now, but I wonder if my volatility stuff's printing. I'll have to check that out. I'm going to hold volatility anyway, so I'll just look at it later. I felt it in my Schwartz. I didn't listen. Yeah. Hit the daily expected move. This is how you trade like water. Daily expected move. I shouldn't expect it to go higher than this. Therefore, take profit. That's what I did with NVIDIA, and now we see this ripping down. If this is a massive handle to grab buyers, though, guys, that could be pretty huge. This is a big handle. NVIDIA not trying to test its lows yet. It seriously is. 500 is the number. 500 you have to keep, and you're $1.50 away from it. 500, like, you probably have to keep that, because if you get below this weekly range and we get any kind of sentiment down tomorrow, it can escalate very quickly. Say hello to stagflation. No, it's not there, guys. No, it's not there. It's going down after the fake pump. It is. But I bet a lot of people are mad that they lost a lot of money last Friday, so I'm still paying attention. The 5-minute is not even negative yet, and it's about to be oversold a little bit. So I know it's a 5-minute chart, but I'm still watching NVIDIA not break down fully, getting little wicks. And I'm thinking NVIDIA is the guy to watch right now. Just like Microsoft was the guy to watch earlier, now it's NVIDIA. We can actually take a peek at Microsoft, see what that looks like. Look at that, it's giving it up, but it's creating the handle right where it should, right? Comes up into a liquidity source. That is going to be where the selling comes in. Okay, now we go down and reach for something. See if some buyers can step in for Microsoft. But great little take profit area. That's why we took some profit off when we saw the SPY daily expected move touched. Took some profit off on this one. Letting the rest ride, though. What did SMCI do? Down 13%. Holy crap. Oh, see, this is a little bit more. This is a little bit more, guys. This wick is insane. Oh god. This is the craziest thing ever. I have to wait 5 minutes. I gotta wait 5 minutes. That's a lot of selling, guys. That's a lot of selling. Now the 15 minutes gonna roll over, so you would say, you know, volatility can be here. We need that to continue tomorrow. We need that to continue for sure. But volatility is still here. You can see it in the action there. Let's go look at volatility. We got 5 minutes left. We can look at this thing. Hasn't even curled up on the 15-minute. About to go positive. So what would happen from here? Still paying attention to the 2-hour. Can that turn back up positive? That would be a very, very bad sign for the SPY coming below that weekly range. 30-minute crosses up positive territory. That's when you know, hey, we're heading much lower. The Dow is still green, not able to break through the low, but also not able to fully break through. I would say break through this little trend here. It kind of popped above it for a second and then fizzled out. Was the 2-hour able to go up? Okay, so 2-hour curls up, then we got a better chance here for the Dow. Yeah, but if we lose 500, that's gonna be insane. They're just, it's giving up all of the gains here. Aren't you glad you took profit? Don't worry, guys. The beer still tastes good. Needs a lime, but tastes good. Yeah, we're expecting some back and forth price action. It's Jerome Powell talking. So if people see this as nothing and the sentiment before continues, then you'd say, well, it might be a little selling coming in. Maybe we do go make that 2-hour divergence. I'm perfectly fine with that. I can get back into the move later. It's not unheard of. But are the things that made this move very obvious, are they crashing down below where they were? Are they testing below where they were? No. Right? No. Okay, Microsoft, are you doing it? Hey, quiet. No. This way over here. Yeah, that's not it. No, not yet. But still, that's ugly. Google. Yes. So we just got to be on our toes. Be willing to go either way, guys. Short at the peak, took my profit. Good job, DD. That's what's up. Hey, that's a lot of selling. I totally get it. I totally get it. Short again tomorrow at the bounce. I might be doing that too. I'm going to see if I can let it ride, see if anything crazy happens over the next few days. But if I see some signals to downside, I already have my volatility hedge in place. All right, so I know we gave that breakdown a little bit early, but it is in there, guys. So if you want to look back at it, look at the last, look about 10 minutes ago. We just gave a breakdown. Now we are testing 500 at this point, so pay attention. But I just wanted to point out at the end of this video real quick, NVIDIA still not fully breaking down to lower levels, completing the cup. This could be a handle, and we might be heading up. Don't let them trap you twice. Pay attention to the signals. That would be this. If we base out anywhere in this area, even on a 5-minute, what are we if we cross up here? We're positive territory. That means the positivity can continue in a positive trend. So don't think that we can't make another move like this just because we're starting to come down. Now, if we lose 500, be very, very cautious. What I would pay attention to, let's see if that 15 minutes able to roll down yet. It looks like it's about to, and maybe in the future we have a chance to get some kind of 15-minute divergence. Maybe this actually ends up happening, and then we see that go like this. Then we have a 15-minute divergence down here, pretty close to our double bottom that could happen. So I would really be paying attention to that. This would actually cause that, maybe if we even came below this, that 2-hour as well might get a divergence down here. If we're going to see that crash happen, just watch for volatility. That thing's going to start to scale up fast. Fast. It is a bear flag. Like you can see it right there. It looks like a flag here. So rejection, not a good thing at this point. I'll be paying attention to futures overnight just to make sure. And then you guys can get the daily expected moves for the SPY and the Qs tomorrow morning when we are live. All right, homies, let's see if anything crazy has happened. Boom, we're closing right at 525, right at our line in the sand. How crazy is that? Of course we are. Of course we are. My goodness, and look at that little pop right there. But we'll have to see what comes from this. This all could have that's a big profit to be made there. So I will be very interested to see what's to come from this, and I'm going to be paying close attention to the futures market tonight. But I just wanted to say this. We already did a pretty good breakdown. You're looking for a break of the SPY below and a crossover of the 15-minute here, the chart that we're on right now. 15-minute curls over, watch for a divergence. Maybe it even creates that 2-hour divergence at the same time. Now, that being said, 500 is important, and the 5-minute, if you want to go really deep into it, the 5-minute is still able to go positive here. Remember that the last time we were here, where were we? Well, we were way down here when we first got there. Where are we at now? We're at that same level, but we're near positive territory. We're much closer to positive territory. So this is the short-term signal I'm looking for if this is going to buy back up. If it's going to break down that 15-minute, it'll be crossed most likely in the morning. And then we'll have to look out for any kind of divergences that we see because we're outside of that weekly expected move. Now, if we end Thursday outside of that weekly expected move, be cautious. Friday, once you go into Friday and you see these weekly expected moves, you have a lot less time. So you can really start to break down. Just subscribe to the channel. When wondering what your recommendations, should I stay away from buying stocks to come these cycle, Lockheed Martin and BEA Systems, and also Costco. My assessment for this channel would be dedicate some time to it. Maybe look back for a few videos because trading like water is what we like to do. I don't necessarily know if you're thinking about options or anything like that. I just don't know enough. But if you hang out here for a bit, chat a little bit, ask some questions in between, I'll start to realize like, oh, okay, Anthony is more of a investor or something like that, or he's an options trader who takes positions and things like that. So yeah, it helps a lot once we actually can understand your trading style and things. But for now, you would say, hey, the direction looked up. Now it looks like we can go either way tomorrow. So we're letting the rest ride, but we made some good profit today. Hey, thank you guys so much for liking, subscribing. Thank you guys for being a part of this community. I really appreciate it. Thank you for Anthony subscribing. And yeah, I tried to comment to your last comment and just stick around. And so I don't have a trading style. Okay, well then the first thing you need to know is there's a course. It's my course. People in here can tell you about it. I'm gonna hop off, but people in here can tell you about it. It'll teach you about weekly ranges. It'll give you a strategy. It'll teach you about all the indicators. It'll even teach you how to set up your indicators, okay? It's a good course. It'll even teach you about the mentality you have to have going in the market and trading. So just take a look at that. It's $149 for the next like almost 3 days now. So it's on a little sale, $149. It's yours. You get to keep it forever. I give my email in it and you can ask me questions. So I really appreciate it, guys. I got to hop off, probably hang with the girls for a little while today. So thank you guys for joining. Thank you for liking, subscribing. Thank you for being a part of this community. And I look forward to the stream tomorrow. I'll see you guys later. Peace.